Welcome to the Concierge CPA. I'm Jackie Meyer, founder of the Concierge Accountant Program and TaxPlanIQ software. This is a podcast for accounting firm owners and influencers who are pursuing world-class service. We discuss their path to excellence, their daily habits, and what influences them and their work. We believe that every person has a unique message that can positively impact the world. Stick around till the end of the show. We'll reveal how you can be our next guest. Let's go, y'all. Welcome to the Concierge CPA. I'm Jackie Meyer, or Dr. Jackie Meyer, as of this week, which I have to throw in there. Yes, thank you, Shauna. I have Shauna, the tax goddess, as my guest today. And being a tax geek myself, I'm probably the most excited about this interview over any of them that I've done with some of the most amazing published authors and things like that over the years, because I love to geek out on taxes. And our audience, of course, is a lot of accountants, financial advisors, but we also want to get to the bottom line for entrepreneurs in general. And Shauna brings a really amazing, unique perspective as top 1% of tax strategists in the nation, which I have to hear all about the backstory of that. I need to know how you became the tax goddess. So yeah, Shauna, fill us in. Tell us more about you and how did you get to where you are today?
Oh my goodness. Lots of stories to get to that answer. So, let me start. Little baby Shauna. Okay. So, not all the way baby. We're going to start in college.
Okay. I was like, I don't know if we have that much time.
Started in astrophysics. So have always had a numbers brain, loved solving problems, that kind of deal. And very long story short, I came home for the summer. I was sipping across the table from my mother, my goddess, right, who I look up to. And she's German, very stoic, okay, very, composed, always really on it. She was opening the mail, and she opened the mail and put it down on the kitchen table and kind of pushed back from the chair and walked off. And I was like, are you okay? What's going on?
Yeah.
Oh, I got a notice from the IRS, and I have a CPA and I have a tax attorney, and nobody can tell me how to deal with this stuff. I've asked them how to reduce the taxes. Nobody has any good plans. It's just taxes, right? She's a small business owner. So what does a daughter do who looks up to their mother, right? So started taking some classes in college, accounting, finance, tax, really starting to see I'm smart. What else can we learn? There's got to be another option out here. And ended up switching from astrophysics to accounting and finance, then a master's in tax, then a CPA, then certified tax coach, certified tax strategist, certified tax professional, and really just specialize. And it all really led to an average for our clients, and of course for my mother as well, a 6.92% tax rate. So if somebody wants to read the full story, I've got a whole chapter on it in the book that was released last year, 6% Life. So, but yeah, that's the shortest version of a really long story. I think I can get you.
Yeah. So you started taking the classes just kind of to help out your mom. You weren't even really thinking about changing careers or your path. What made you change your mind about that?
I think really what it was, I'm like solving problems. Okay.
Yeah.
And once I realized how many options there were in the tax code, there's thousands of strategies. And once you know them, you can apply them to any given problem. So any situation, any facts and circumstances, any option. And of course, it helps that everybody on the planet does not want to overpay their taxes, right? So that leads to a very nice win for everybody except for the government, which I'm fine with. So,
right. Yeah, for sure. It's interesting. Like during my doctoral process, I got into accounting just because I knew I was good at numbers. I was actually an undergrad in finance, and then I went back for my master's in accounting, but tax planning was my thing. And at the time, 20 years ago, which is hard to say, but at the time, becoming a CPA was the only way to really get into that. Now, a lot of people are doing tax planning advisory, which is really exciting. But yeah, but I fell in love with tax planning because of the same exact thing. I love solving problems. I love not having a lot of money growing up. I love being able to magically and legally manipulate the tax code to like produce all this money for my clients. And so it was just so much freaking fun. And anytime I can get around other people like you that like really I can tell enjoy it and love it and whatnot, that's my jam. So, okay, so we started in the tax side of the world. And then how did you end up? You're now like a serial entrepreneur, essentially. And how did you get from there to here?
Okay. So actually, funny enough, today is literally the 20th anniversary for Tax Goddess. So,
Congratulations.
Thank you. So, and you've hit the nail on the head as far as a serial entrepreneur. So, as I've been going along, handling clients, helping them with their issues, figuring out what problems there are, again, I like to solve problems. So we've added, for example, we have a profit first app on the phone called Cash Goblin. New business, helps people with profit first. We've got a business called Talent Gnome that helps business owners hire overseas, right? Can't find the right talent you're looking for, help them hire overseas, bring those remote jobs and get the skills and talent that you need. We've got another company, IRS Guys, that helps people with IRS notices, right? What do we do to handle the IRS notice so that we can move you into a proper place to then be able to do tax strategy with you so you never get into that problem again? So a lot of what we do, and we call it the Tax Goddess group of companies, a lot of what we do is specifically related to tying business owners together, solving problems that they have that our team has a skill set to manage.
So. Yeah. Would you say that you niche down in a certain area of business ownership, or are you across the board with industries or income level and that kind of thing?
Yeah, so I suppose it depends on what you're talking about. From the standpoint of tax strategy specifically, if you're not paying at least $100,000 in tax and your taxable income isn't $1 million or more, we're not the right fit, right? Okay. The little guys, we've got strategies for you, but strategies cost money to figure them out, to implement them.
There's a cost benefit to every single one, right? And so if the cost benefit's not there, then you don't want to bring it to the table. That makes sense.
Exactly. Yeah, why would I charge you more than I can save you?
Right.
It doesn't help you. So when we look at hiring overseas, that could be a huge business. So we've worked with some really big corporation level people, all the way down to a small individual. I'm looking for my very first executive assistant type job roles. So
sure.
And of course, profit first applies to almost anyone. So it really just depends on which business we're talking about.
Yeah. Okay. That makes sense. I like that you have a very specific threshold when it comes to clients of the tax planning firm. My own firm that I had for 14 years and sold a couple years ago, you really did want to get very specific with that for who you can help. Now, we got to get into some of your favorite strategies for these kind of high net worth entrepreneurs that you're working with. You like to look at not just necessarily immediate short-term tax savings, but probably their longer-term financial picture. And how does financial advisory come into play with that? Do you work with financial advisors, or do y'all supply that work yourself?
Yeah, no. So one of the things I've learned is you only give advice on things you really, 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 really know well.
Yes, I like that.
You get yourself into trouble. So,
right.
Yeah, no, we've always taken the approach that, listen, there's experts in almost every field, right? Insurance planning, financial advising, stockbrokers, probably different than your financial advisor. Real estate attorney is different than your trust and estate attorney, right? So as we start to look at any given client, the very first two questions that we ask them is, what's the plan? What's the path? What do you want to do in life, right? There are very different strategies for real estate people than there are for nonprofits, for example. And the second question is, how aggressive do you want to be, right? There's a scale. We've created a scale, 0 to 10. 0 meaning the IRS never calls you never, ever, except for a random audit. And 10 meaning we're all going to jail. Right. So depending on where the person, the business, the spouse sit on that scale, we look at, well, what kind of strategies do you need? And with those strategies, who do you need on the team? Right. So do you need an expert in oil and gas? Do you need an expert in the solar credits? Like, who do you need for which strategies we're using?
Sure. Okay. And so you mentioned oil and gas, you mentioned solar credits. What is your kind of like favorite strategy these days that you're like, just love to do?
You know, I know it's taken a lot of flack lately, but I am still a huge fan of captive insurance as long as you have real risk.
Yes.
Okay. And I think that's where a lot of people got into some pretty serious trouble with it.
Yeah.
Famous court case, of course, rancher with all of his cattle on the top of the mesa bought flood insurance. There's no flood on a mesa, right? Unless we're talking biblical level Noah type stuff, right? There's no flood on a mesa. So, if you're doing insurance for the purpose of the tax write-off only and not to actually prevent against real risks, right? So, two famous examples we have, even within our own firm, we've got somebody who, still does, thank goodness, all the catering for the Major League Baseball teams, bought $600,000 worth of food on February 15th, right before they shut everybody down for COVID.
Ooh, yeah.
Right. So $600,000 worth of food spoilage went to his normal insurance company and said, great, this is why I've been paying you premiums for 20 years, pay me. And they said, sorry, act of God, we're not going to pay you. So went to his captive, got paid out, business can continue. Things like that can be life-changing and literally business crushing if you are not properly covered. So I love captives, but they have to be used properly.
Sure. So let's expand a bit. For those that aren't super familiar with the captive insurance concept, let's expand a bit more on what it is, how it can essentially, it's one of those strategies that can essentially wipe out 100K liability each year. Yeah. So there's a lot to it. Why do people put it on this nasty list? And how do you stay away from that? Or how, if you're working with an advisor that's recommending this, how do you know that you're going down the right path?
100%. So lots of questions there. I love it. So the first one is, how do you stay away from the nasty versions? Okay. Because the IRS, the people that started the concern here were the IRS. No big surprise. And that's their job, right? They are supposed to protect the public from bad things. They create every year what's called the Dirty Dozen list, looking at strategies that are abusive, right? Things that go against the intent or spirit of the law. So I think the advice to anybody listening here, the first one is due diligence, which I feel like has been said and said and said some more, okay? But due diligence is super important here, okay? There are certain companies that if you work with them, you will get automatically audited, period. The IRS has put a black mark on them for something else they've done. There are other companies that you work with, never been audited, right? Or maybe audited 1 or 2 times, but they've won all of their audits.
Sure.
And I think this really goes back to the aggression scale, speed. Okay. If you as a client or you as a CPA or a financial advisor, if you have a client calling you on December 31st, there's not a whole lot you can do that year. Okay. So planning takes time. And generally to do it well, a good captive company is going to take 2 to 3 months to get it set up, to get all of your risks determined, right? They have insurance adjusters that come out and look at the risks in your portfolio. So if somebody tells you, oh yeah, you can call me on December 31st and we can get it set up for you. Maybe
it's a red flag.
I know some companies that do that. Okay.
Yeah.
But your risk level now just went from a level 4 to potentially a level 9, right? So It really depends on who you are and what you want. And I think that's one of the biggest questions we get asked is, Shauna, I'd love to save $100,000 on my taxes, $200,000, $300,000 on my taxes. When do I start tax planning? Yesterday.
Right.
Because the bigger that number is, the more time you need to be able to do it properly, right? Cross those T's, dot those I's, do all the documentation, do your due diligence, those kinds of things.
Yeah, I think a huge misnomer of tax planning is that even across our own industry and peers, is that it always needs to be done in the fourth quarter. You can do tax planning any time of year, and the earlier the better. Because why not know what your liability is going to be and then know how to track it throughout the year? So no, forget about this November, December 31st nonsense. No one wants their whole Christmas ruined by tax planning, right? So yeah.
I think this is one of the areas where a lot of consumers, a lot of our clientele don't necessarily understand what's going on.
Yeah.
So there's a big difference between a CPA that files a tax return and a CPA or a pure tax strategist. Okay. Now, a CPA that files a return, okay, they're busy January, February, March, April. That's obvious. Okay. But most of them will file an extension, which means they're also busy until deadlines, September and October 15th.
Sure.
So the only time left at the end of the year to plan is November, December. And I agree with your statement 100%. If your CPA is only looking at your stuff in November, December, you might want to find a new strategist. You might want to find somebody else for your team.
Oh my gosh, there's so many directions we could go with the title of this episode. It could be like how to wipe out 100K tax liability, or it could be how do you know you have a crappy tax advisor, right? So 100%. Let's talk a little bit more about that. What are like the basics if someone asks you, well, I have a tax preparer or I have an accountant. They're already doing all this for me. And the answer is typically no, they're not, right? And it's because if they are more compliance focused, they're just too freaking busy to be looking ahead at proactive stuff. That's just is what it is, right? What are those, like warning signs or things that you would say you need to ask and make sure that people are doing this for you if you truly want a tax planner?
Absolutely. Well, and what always cinches for me is, listen, if you're a CPA, if you bring an article from the Wall Street Journal to your tax preparer, to your CPA, whoever that is, and say, hey, can we do this? And they do not say, oh yeah, I've already read that. And, I just hadn't reached out to you or something like that, right? If they are not reading, if they are not studying, if they are not reading, the IRS comes out with updates 3 times a day. So if you've got a preparer who is focused on preparing the return and not keeping up with the news articles and what the court cases and absolutely everything that's going on, there's no way they can be a proper planner. Because that's the job of a planner, right? Is to be up to date with all the rules and the law changes, any court cases, what might happen next week, right? These are the jobs of a planner.
Yeah.
So, when we talk about the most common things that I hear, right? I love your statement, right? Oh, my tax preparer CPA is already doing all this for me. Maybe, sure. Tell me what strategies they're giving.
Yeah.
So if they're talking about funded defined benefit plan, funded cash balance plan, buy a car, get the kids on payroll, do the master's exemption to a planner, to a strategist, these are the like baby hanging fruit, almost touching the ground, like just a step above somebody that's just straight up prepared.
Yeah.
Okay.
Default baseline stuff, phase 1 of the planning. Yep, for sure.
100%. 100%. Now, I always love picking on the real estate people for this because it's such a good question. If you're in a real estate industry, okay, and you're going with the rentals or the short-term Airbnbs or whatever it is, right? You're doing property. If you go to your preparer, your CPA, and you say, great, I've performed a cost segregation study. How does this get reported in the return? And they go blank, it's time to find a new one. Okay. Like that's.
Oh, I've seen so many people miss out on the cost segs because of the passive loss limitations, or they didn't qualify to take it. And the taxpayer is bringing this information to the accountant. The accountant has no idea what to do with it. It's very sad.
Yep. And the one that breaks my heart the most is when the person could have taken it, right? The taxpayer could have taken it. So let's say you've got a business owner and they buy a building and their business is in the building, right? So we can perform an aggregation election, take the cost seg, wipe out all of your profit in the first year, but it's the first year and the first year only. Mm-hmm. And if you don't make that election, you're done, you're cut. And we have had case after case where somebody comes in, oh yeah, I bought a building last year. It just breaks my heart, right? Because unfortunately, it is what it is. You either did the election or you didn't. There's no way around it.
Yeah.
So having somebody, I think to me, the sign of a really good professional, whether it's a tax preparer or you're interviewing strategists from that standpoint, is, okay, first of all, tell me strategies, right? Are they the baby basic things, or are they more complex, like the captive, like let's think solar with a 3-year carryback with a 5 times return on investment.
Yeah.
Right. If you start hearing that kind of stuff, you're more likely in the upper, maybe medium to upper kind of level here. Okay. If you hear entity structuring, that's kind of more medium. Okay. So maybe we should consider opening a C Corp as well as your S Corp to move money between the two. Okay. So a million options here, right? We tend to look at about 1,500 strategies for every case. So if somebody says, oh, I've got 3 strategies and that's going to wipe out your tax bill, ask some questions. How many other strategies do you have?
Yeah,
What
you
else
don't really want
show
like
me?
someone with one idea, right? 'Cause
There is no silver bullet. There's no silver bullet. 100%.
yeah,
It doesn't exist.
exactly.
Yeah.
Interesting. Okay. And then how much do you dabble with estate planning and working with like estate attorneys and that side of things?
100%. So I appreciate the word dabble there. I really do. So again, when a proper tax strategist looks at everything, they're looking at literally everything. I want to know the color of your socks. I want to know why, not that you own a property somewhere. Why do you own the property in that location? I want to know your financial status, right? So do we have life insurance? Do we have stock? We absolutely need to know what kind of estate and trust planning is going on. Do you have an irrevocable trust? Which at this point is the basics. Like, period. If you have a child or your net worth is more than $250,000, please get an irrevocable trust. I'm sorry.
Okay. Yeah.
But there's a million other kinds of trusts, right? What are you trying to do? Are you going to slide into the grave with 0, or are you going to leave an entire empire for your kids of your 200 real estate portfolio, and you want them to double that empire with every generation? What you want to train your kids, all of these things need to be built into not only just the tax plan. The tax plan is like this little piece, but it needs to be built into ILITs. So insurance planning needs to be built into trust and estate, right? How many generations are we doing generation skipping? I mean, somebody once told me, Shauna, can you draw a mind map of every single decision that you need to make on a file? And I thought about it and I said, nope. There's literally millions of paths.
Yeah. Oh, that's so interesting. So I've done the same thing though, because I have a tax advisory software, TaxPlanIQ, and I'm literally taking from my mind how I would make those decisions around a strategy. And you can do it around some things, but other things, there's so much of this like kind of gut feel that goes with it. And it's so interesting how it comes together, isn't it?
100%. Well, and I think one of the major issues is, of course, length of experience, right? So you what is one of the questions that I would ask if I were to go find a tax strategist? How long have you been doing this, right? Is it 1 year, right? And you're calling yourself a strategist? I really don't want to be the guinea pig for whatever it is you've decided is the strategy, right? So you really want to be looking at people that have been around, that have been in the industry. For me, it's also a breadth of education and knowledge. So not only just school education, but for example, I've worked for KPMG, really, really, really big, one of the top 4, medium-sized, way back when, American Express Tax and Business, and all the way down to a small private that taught more about how do you communicate, how do you educate a client. You can't talk tax code all the time. So when you're looking at who you want to work with, not only do you have to find the vibe, right? Like you got to like the person.
Sure.
But you really do have to look at, you are trusting this person not only with your money, not only past money, future money, current money, but also in some cases your livelihood, right? If they make the wrong check mark on a form, the IRS could get pretty upset, and they're not only going to go after the preparer. So you really want to make sure you're working with the right team.
Okay. Yeah, that's really great advice. I love all of that. I think that it rounds it out really well. I think the one question about what are your favorite strategies, and the fact if they're like, well, I like to have you contribute to your IRA, and it's like,
Hey, listen,
That's a good
it's a
one.
valid strategy. It is absolutely a valid strategy,
Yes,
right?
yes.
And so for somebody where contributing $7,000 to an IRA that is how much money they have for the year.
Yes,
Great. Let's do that. It's better than nothing, right?
exactly.
But if your business is taking home $1 million a year, that IRA, it helps. Don't get me wrong. Okay. But it's a drop in the bucket, right?
Right, exactly. Okay, let's circle back because I don't think we ever actually got into defining the captive insurance and how it's beneficial. So give me the elevator pitch. So much to talk about, but give me the elevator pitch of what a captive is and, how it deducts in the initial year over years and how it's saving them.
Absolutely. So think about captive, not captive, doesn't matter. You buy insurance because you're trying to protect against a risk. Now, there's lots of very common risks. Okay. So as CPAs, as financial planners, you have errors and omissions. Okay. You might have general liability. You might have workers' comp. As a taxpayer, you have insurance on your car in case you get into a car accident. Your house burns down. You've got insurance for that. Okay. So what a captive does, and there's multiple types of captives. There's really, really big captives and then all the way down to micro captives. Okay. What a captive does is it looks at what risks do you have that are not currently covered by your regular traditional insurance.
Mm-hmm.
So if you have errors and omission with your regular insurance carrier, okay, you may want to consider, what about data breach? Okay, does your current CPA or financial advisor insurance cover data breach? Okay.
Which, by the way, a lot of them don't, and people don't realize that, right?
100%.
Yeah.
100%. Yeah, most of the captives are really looking at what they call the enterprise risk management. So data breach, if you work in China or Russia, right? Ransom, threat, bodily harm, and ransom insurance. What about losing a key client, a key employee, a key supplier? Okay. COVID, again, I come back to COVID. One of the biggest policies that we had seen being sold pre-COVID, and thank goodness people had it, supply chain interruption. One of our clients builds roofs, right, on Amazon warehouses. Couldn't get nails to hammer nail things into the roof. Supply chain interruption. So there's quite a lot of different kinds of insurance policies that your business may qualify for, but no matter which you choose, the key premise here, it has to be a risk that is real, right? So supply chain pre-COVID, maybe, okay, but now post-COVID, we all know that could happen in a heartbeat. You could be out of supplies in a week, right? So making sure that you've got the right kind of insurance for a real risk. And of course, then you would be paying the insurance. Now, generally what happens with a captive, you have your main operating business. So let's just call it an S Corp for ease here. You've got a C Corp that is an insurance corp. It is a specific type of C Corp. Your S Corporation would pay premiums just like it would to State Farm, Farmers, whoever, okay? It's going to pay those insurance premiums. It's going to get a deduction for it. And the C Corporation holds on to those premiums typically for a year and a day until any claims that could happen on the insurance are over, right? So just like your car insurance, you buy your car insurance by the month or by the year. If you don't pay your premiums, that's it, right? Policy's over. And at the end of the year, typically your policy is up, right? Whatever amount of money the insurance company earned is premiums for the insurance company. Now, one of the coolest things about the insurance company, and this is really where the magic happens, the S Corporation, of course, is going to get the deduction for the premiums that it paid, right? It paid $100,000 in insurance premiums for this policy. If there was no call on the insurance, that money is gone. The S Corporation no longer has the money. The C Corporation has the money. To the C Corporation, it only has to pay tax on the earnings. So if you took that $100,000 inside the C Corp and put it in a 7% return savings account, the C Corporation would only pay tax on the earnings. Okay? The rest of the money in that company belongs to whoever owns the insurance company. Typically, that's you as the business owner. So 3 different ways to get your money out, because that was the next question. Well, that's great. I'm shoving a bunch of money into the C Corp. Like,
Sure.
how do I access it? What do I do?
Yeah.
One, you can shut down the C Corp. You get a 20% long-term capital gain. Okay. 20, 25, 21, depends on which state you live in. Okay. So you get a long-term capital gain. You could take a dividend. Okay. So whatever the dividend tax rate is at the time, but realize most of these captive insurance companies are U.S. insurance companies. So dividends also sometimes have a preferred rate. And the third one is that the C corporation can go and invest in whatever it wants to. So if it decides that you buying 15 rental properties is a good investment to earn money for the C corporation, you can now go buy 15 rental properties with your C corp.
Yeah.
So yeah, there's a lot of really cool things you can do with it. But again, as you can hear, if all the way through this discussion, if you don't do it right, the IRS gets kind of cranky. So
Sure. Yeah. So so taking a step back here, we're not talking about, pennies on the dollar here, a $5,000 a year premium. What's the biggest premium you've seen paid in 1 year? Has it been like over $1 million or?
Oh yeah.
Okay.
Oh yeah. Yeah.
Wow.
So there's really, and that's where the different levels, the different types of captive insurance come in, because there's micro captives, there's reinsurance companies, and then there's a true captive. Okay. So most of them, I'd say 75% of them are probably reinsurance. The maximum limit you can put in per year is 2.3 million. So most people aim to hit that limit.
Yeah. And that's a deduction to your business. So you take the 2.3 times 0.37% or whatever your personal marginal rate is, and that is the tax savings in that year, which is pretty amazing.
100%. 100%. Yeah.
Very cool.
So they're excellent tools, but I think this is one of the biggest parts of any tax strategy. All of them are a tool, and you don't pull out a hammer to saw a tree, right? You pull out a saw to saw a tree.
Sure.
So when people come and they say, okay, well, give me, as we said earlier, that one silver bullet. I love captives. I think they're great. However, if you're trying to use a hammer instead of a saw, the tree's going to fall the wrong way. You're probably going to get crushed. So you've got to use the right tools for the right job.
Mm-hmm. And what's the latest on it being a listed transaction, not being a listed transaction? I know a lot of those rules changed over the last couple of years.
Yep. And they continue to change every single day. So I'm going to answer in the current moment, like as of this recording, because literally it could change tomorrow. They're different. Companies are saying different things. Listen, I'm a big fan of report everything. Okay. Right? Report every dollar, report every expense, report, even if it's listed or not listed, it doesn't do you any harm to report the transaction. So we're big fans of report it. We've been reporting it as listed. Some of the companies will tell you that it's not. And this is where, I'm reading the court case this way. You're reading the court case this way.
Right.
I look at it and say, listen, I want to be as conservative with my money as possible. This strategy is already somewhere between a 4 and a 7 on our regression scale. So if I'm up at a 7, I want to make sure I'm crossing those T's, dotting those I's. Doesn't do me, in my opinion, doesn't do me any harm to report it. And then if they have questions, you show them. Here's the backup. Here's what we're doing. Here's why we're doing it.
Sure. Yeah. So by being a listed transaction, it just means that you're filling out an additional form with their tax return stating that it is. What Shauna is saying here is that it used to be technically a listed transaction with the IRS. Now, because of court cases, it is not currently, but they think it will be again soon, maybe. And so that's why I just conservative aspect comes into play. Yeah. And I love that. I think that's great, being conservative, going ahead and just filing as conservative as possible. How much more higher audit risk do you think there is by filing that listed transaction form compared to not filing it with a client?
I'm going to come at that question a different way. Okay. So about probably a year and like 1.75 years ago, somewhere in there. I'm terrible with time. Okay. Let's call it almost 2 years ago. Okay. The IRS was promised this huge budget. Okay. And so they kind of went on a media spree saying, we're going to hire 87,000 agents and you better watch out. We're coming for you. And then, of course, 6 months later, I think 25% of that budget disappeared, which was the budget
Happened fast.
Right. So, the IRS then later released a statement saying if your income is less than $1 million, we just don't have the bandwidth. Like, we just don't, right? So, it's very difficult to speak about audit rates because, of course, I'm not internal to the IRS, right? I don't work for the dark side. Love you, IRS. I know we need you, but still, it's very difficult to talk about audit rates, which is why I tell all of my clients, you better have a reason, you better have the documentation, right? Because if they call you, the last thing you want is, well, I can't find that paperwork. I don't know why we did it. I don't have any of the documentation. I was just borrowing money out of the C Corp whenever I wanted to, right? Like, if you're going to run one of these strategies, run it above board, run it according to the rules, do everything you possibly need to do. Is it going to increase your audit risk? Maybe. Is filing the 8886? Maybe. Okay. But I guess that's the question. If you really want to fly under the radar, maybe this isn't the transaction for you. So,
right. If they're on a 0 on that 0 to 10 scale that you mentioned,
this is not
a strategy for them, right? If you're not wanting to wait around for a letter to come in the mail, because you never know, right?
Correct.
Okay.
Yeah.
Good deal.
Yeah, some people have actually said, listen, I'm a 7, I'm an 8. I'm like, okay, at an 8, you're kind of expecting there might be an IRS call. Oh, well, no, I don't want that. So what does that mean? Yeah, 5 or 6. Well, but they could still call me. Yeah. And so we start going down and down and down the scale. And I've had clients actually tell me, Shauna, go to a 0. I never want to call, never ever, except for random audit. I'm like, listen, it is our job as strategists, as your financial team, to do whatever it is you want. Mm-hmm. So if you tell us a 0, we will only give you strategies at a 0.
Yeah, that's great. So let's talk a little bit about pricing. Is there a particular pricing method that you like to use as a tax strategist or that you recommend to others? Or do you think, you do you, whatever, works for that accountant works for that accountant?
That is a great question. So I'm going to answer it from standpoint of about 2-3 years ago, and then I'm going to answer it now.
Okay, cool.
So 2-3 years ago, and I think this is one of the biggest differentiators here for your audience, okay, for the CPAs, for the financial advisors. 2-3 years ago, there were really only about 3 or 4 major players in the tax strategy industry. That's it. Okay. And most of us had been around for, 20 years, right? We've been doing this for a really long time. In the past 2-3 years, right, we're starting to see a lot of, and you hit on it earlier, a lot of these, I'm a tax consultant, but I've been doing it for 6 months. I've been doing it for a year. And what we're seeing is that, of course, the younger strategists are coming in and they're saying, oh, I'll charge you $5,000 and I'll give you all the strategies and all the pricing and all the things. Okay. My personal opinion is if your clients are going to go to somebody because they're a lower price than you are, you probably don't want them as a client.
Yeah.
People who walk around and kick tires and do this kind of thing, they're not paying for value. They're not paying for knowledge. They're not paying for experience. They're trying to get what they can at the cheapest price possible. And that is a very dangerous place to play, especially for taxpayers, because you don't know. You don't know if that strategist that's been around for 1, 2, 3 years has seen the court cases. How many have they won? How many audits have they been through? A great example, over our 20 years, we've had about 9 audits.
Okay.
2 of them actually went to an agent, right? It sat in front of appeals boards, this kind of thing. In both cases, we won with no change.
Love it.
So, right. So those are the kind of statistics. If you were a taxpayer and you're looking for help, you want statistics, provable numbers, provable statistics. How much have they saved? Okay, so we just crossed $1.57 billion last month for our clients.
Amazing. Congratulations.
Thank you. Congratulations to our clients, all the fun bits. But these are the kinds of things. So my commentary is, right, you do you on the pricing. Okay, a lot of it is going to depend on your network, on your testimonials. Who knows you? What have you done? Your publicity. Okay, Forbes and Entrepreneur helped a lot. So no arguments there. But yeah, it's really, I suggest that you charge what you feel comfortable with. Okay. If $5,000 is a lot for you and you're nervous about it and you're not 100% sure that you're going to be able to deliver that value, go with $3,500.
Yeah.
For us, our average plan costs anywhere between $60,000 and $80,000. Highest return we've ever gotten in a single plan was $112.4 million. Wow. So it really just depends on what's going on and what's the situation.
Okay, yeah. And so it sounds like you value price then, and is it kind of upfront based on?
100%.
Awesome. Okay, that's what I do.
Strategy. Yeah, based on strategy. So, and for any young CPAs that don't know this, okay, it's actually, you will lose your license if you charge your fee based on a percentage of savings. Okay, that's anti all the rules. It causes things. Don't do that. Okay. We look at every strategy, like I said, about 1,500 of them. We look at every strategy and then we look at the case and we say, okay, in your case, these are the top 20 that are going to apply to you specifically. And we know that strategy 1 takes us about 25 hours to do. Strategy 2 takes us about 15. Strategy 3, and you go down the list. So we have a flat rate per strategy, and then it's basically a sum. How many strategies do we need to get you where you want to go?
Interesting. Okay. Yeah, that works. Cool. All right. So let's see. I think I've asked you a lot of my favorite questions. I guess as we kind of wrap up the episode, I'm curious if there's any particular tips or tricks that you have or advice that you have either for other accountants or for taxpayers when it comes to this stuff in general. I mean, we've talked in depth about what to look for, expertise that someone should have in this area, but anything else that comes to mind that you want to throw out there?
Yeah, I mean, if I'm speaking to the professionals, right, team up with somebody who this is their specialty, right? I'm not an attorney. We don't do trust and estate. I'm not a financial advisor. We don't do insurance sales, stock picking. We don't do any of that.
Mm-hmm.
Build your team, okay? And network within your team, okay? The fastest way to bringing value to clients is working together, okay? If your team, if client's financial team is working in silos, we've seen multiple cases where one person recommends something, the other person recommends something else. Those two step on each other's toes, or one says yes, the other one says no. Okay. So I think that the same advice would go to the client themselves, the taxpayer themselves, right? You find your team. And for me, one of the most important questions I ask is, so how often do you meet with me and the rest of my team? Is that once forever? Is that once a quarter? What is that, right? Because I would like my team to be on the same page all the time, right? So.
Okay, yeah. So I think kind of to reiterate that, no one can really be a jack of all trades when it comes to everything in our field. And so while, yes, the taxpayers tend to be like, oh, this one company tells me they can offer me legal, financial, tax advice, tax prep, etc., it sounds lovely to like group it all together and whatnot, but I promise you, and I'm sure Shauna would agree, that's not going to be your best team because you need those specialists in all those different areas, and then you need them to team up together. And so that's a great way to also ask potential advisors, how do you deal with these kind of situations, or who do you work with, or who do you recommend? So that's really cool. I love it. All right, awesome. Any other favorite tax planning moments or anything that's happened over the years that you thought was pretty funny when it comes to being a tax advisor?
Oh, geez. That could be a whole other episode there.
Yeah.
What's immediately coming to mind is all of the fun things that we've been asked to write off, right? So how do I write off my Rolexes? How do I write off the yachts? How do I write off my homing pigeons? Okay. How do I write off, excuse me for a little bit risque, but enhancements? Okay. How about that? I have been asked everything under the sun by almost every profession. And I think the biggest thing is keep your mind open. Okay. Nothing other than, illegal drugs and sex trafficking, right? Like whatever, right? Nothing is illegal unless it's specifically stated it's illegal. So how do you figure out how to get what it is that you or your client wants, right? Is there a way to use this beautiful, super complex tax code that we have to move here, open a business, do this thing, hire your kids, and because you have all the right pieces, now you can write off the yacht, now you can write off the Rolexes, like whatever it is that you want to write off. So I think keeping an open mind is really, really important. And I suppose that would probably be the last piece of advice I have for any taxpayers, any clients listening. If you bring that article to your CPA and immediately the CPA, well, I don't know anything about that, I'm not doing it, start looking. Okay, you want somebody with an open mind. So.
Yes, you want someone that's going to ask why and not just say no.
100%. 100%.
I hate that about our profession when it's just no. And it's like, how can this be done? Because it's a very creative process that we go through for these gray areas of the tax code. So yeah, very cool. Well, Shauna, thank you so much for your time. Really appreciate having you on. How can someone get a hold of you if they'd like to learn more about you?
Oh, I love it. Thank you. Well, if you're on the tax strategy and taxgoddess.com, super easy to find. If you're having problems hiring staff and you're looking to hire some great talent, go to talentgnome.com. And if you want to hear about Profit First, if you're looking for a way to help convince your clients to do Profit First automatically, that one you want to go to cashgoblin.com. So lots of options, pretty easy to find.
Love it. Love it. Okay. Well, thank you. So I will wrap up with the episode sponsor, which happens to be my own founded company this time, TaxPlanIQ. We have released a very, very big automation that is taking tax planning for tax advisors and experts down to mere minutes, if not seconds, to help you craft these plans. And we're utilizing my own ROI method of value pricing. So please go check out TaxPlanIQ if you haven't recently. We are so excited about these major changes that we've been releasing. And Shauna, thank you again for your time. Really appreciate it. Y'all take care.
Thanks for having me.
Thank you for listening to the Concierge CPA, hosted by TaxPlanIQ. We believe that every person has a unique message that can positively impact the world. If you are a successful accounting firm owner or influencer who would like to be on this program, please visit JackieMeyerCPA.com, JackieMeyer CPA.com to apply. Please share this on social media and rate us so we can continue our good work. Join our Facebook group called Accounting Firm Influencers, or connect with me on most platforms under Jackie Meyer CPA. Thanks for being accountable to transforming our industry today.